Good morning, everybody. Mike Vacchi, PrincetonTrader.com here for NTMarkets.com with your Friday morning pre-market webcast. Okay, daily chart of the ES, and let's talk about this a little bit. Um, we had set out some goals yesterday for the bears. Uh, the first goal was to trade to 1748. That was not met. The second goal was to trade below 51.75, which was the previous day low. That happened, so they get credit for that one. The other thing we wanted was for the pre FOMC price up at 1762 to stay preserved. Now they traded through it to 64, which wasn't ideal, but they closed well below it, so that's fine. So two in the plus column, one in the minus column for the bears. So I'm still short. Um, Yesterday was a nice market because it let you be short and stay short, and it also let you for those of you that trade with more than one account, it let you get long the move down to 50. So we caught that for about 10 handles on the runner, 5 handles, 6 handles, and 10 handles as we took it off. Nobody ever mentions that part. Everybody goes, 20 handle win. Come on, you took some for like 4 handles to begin with. I mean, if you didn't, you're crazy. Um, I mean, nobody trades like that. Um, so what about today? Well, today I'm going to hold the Bears' feet to their fire. They have got to trade through 48. That's the weekly pivot, and we need to get through it. And we're also going to need to close below yesterday's close, which was 1755 quarter. So we got to stay below 1755 quarter, and we got to trade through the 1748 level. Um, if they do that, what that will do is continue to roll the daily chart. And if we continue to roll the daily chart, then we can start to push down to 1740, 1741. The reason I'm asking for these things on a closing basis is if they don't do it, if they fail to do it, what it's going to do is allow the bulls to come in and buy the dip with enough confidence to push it back through 62. And if we close above 62, we will, we're off to, I think I said 93 yesterday. I think that's about right, 93 to 97 if we close above 62. So they have to keep that price under 62, and the best way to do that is put as much distance between themselves and 62 as possible. Now, is this the correction of corrections? I don't think so. I really don't, simply because the macro environment doesn't support it. If we get there's some talk this morning that the next jobs report, which is not today, which is next Friday, is going to be really bad. Let's assume for a minute it's really bad. I think you would get an initial sell-off, but I think that sell-off is a buy because it keeps the Fed on the sidelines. So, bad news is good news right now. The more bad news, the longer they can put off the taper, and I think the market likes that. So is this a sell-off of sell-offs? No, I don't think so. But I do think that the middle Bollinger Band will need to be tested at some point, and that's right here, the green line down here, which is merging with this double fib area at 1722. If over the course of time it rises up into the 1730 to 1734 area, and it can, depend, with the steepness of this move, that's a nice place for a target if the bears can keep pushing. Right now, what the bears have to do is keep this from being a 2-day blip, and the longer we hang around above 1750, the more that's going to be exactly what we have is a couple of day blip. You've got to remember back a couple of months ago, I'll go back on the chart. Okay, what I've done is I've moved the daily chart back a bit to July. Recall what happened there. You had the 1670 area, and we kept pushing on 1670, pushing on 1670, and then eventually we had to go up and take another leg. That's how we got through 1700 in the first place, was 1670 kept holding. My concern right now is that you're going to see 1750 start to hold. You saw 64 or 34 rather hold, okay? Then you saw 40 hold. If 50 starts to hold, it's such an easy target for the dip buyers that they're going to buy it, and we're going to head up to new highs. And that's just the way the market works. The best way for the bears to take care of that situation is to get back through 50, back through 48, and stay there. And I think they have a chance to do it. The market is weak enough. I think that the weak longs are worried enough to make it happen, but we'll have to see how it plays out. Okay, Everybody have an amazing trading day. Follow us on Twitter at Princeton Trader. Check out the website. Check out the chat room. Got a lot of new trials signing up. Really excited about that. And hopefully we can help their trading, and maybe we can help yours too. So come check it out. I will be back Monday morning with another webcast. Have a fantastic weekend and trade them well.